No. See, first of all, try to understand the basic structure. I'll explain you that part as well. If you see investor C, A, B, so they'll invest in their feeders. They'll invest in their feeders, right? So here also, if you see, might be, let's take an example. This is a master and feeder structure. Okay. This is a master and feeder structure. And I already told you master and feeder structure, it means that help investment managers to manage the investment at an international level. Also, that helps investment manager to manage the taxes. This structure also is effective for if you see investment from a different countries. And apart from that, you can easily save, means feeder can easily save trading and promotion cost as well, means trading or custodian or other cost as well. They can easily save it. Why? The reason is feeder don't need to create any active accounts, broker accounts and all. Only the master will create it. The reason is, so master focus on trading and investment. So master manage the actively trading and investment. Then what about feeder? So feeder, they raise the funds. To raise the funds. So feeder, they raise the funds and invest in masters. So this applies to all feeders. And again, we talked about exception as well. Investor means individual investor also can invest directly in the master. So here again, so I'll talk about exception. Exception, it means that the challenge, as you said, like currency. Let's say master which is set up in US, right? So this will form as a separate entity, trading entity, and their main goal would be to do trades in a different variety of financial instrument in different markets. That's what their goal is. But what if the feeder is holding INR currency? Feeder C. Feeder A is holding, let's say, GBP currency, and feeder this IFL is holding the euro currency. So master can open multiple currency accounts as well. Master can open multiple currency accounts for USD, Euro, INR. The reason is here main means master main goal is to manage the investment. If they don't want to invest in international market, if they don't want to invest in international market, then even they don't require master and feeder structure also. Correct. The point here is you had a question like what if there are different currencies? They actually want different currencies because master want to invest globally. Master want to invest in UK, US, Canada, maybe France, Europe, Italy, Germany. So in a different countries, and that's what they need a pool. They need a pool or they need a fund in a different currencies from the different feeders, so where they can manage it easily. And on top of that, they if the required funds, let's say they have only received fund in INR, then they can convert into USD. If they have received only fund into USD, then they can convert into GBP. They can convert into Euro. So in whichever currency they want, they can convert and they can invest or whatever objectives that they have decided or convert to their feeders, they work accordingly as per their stated investment objectives or already decided objectives. Right? So that's not the big deal. So it means here currency conversion that you would see. But already the feeders they set for a different countries of investor. It means they received fund in a different currencies. So what they required different Nostro and Vostro accounts where they can manage their international funds. So where feeder can maintain it, different feeder can maintain the accounts for a different currencies. Anyways, what we do here, feeder can do the business in trading currency, right? And all feeders, they maintain the all the records in base currency, but also they maintain the records in other trading currency as well to maintain the ratio and to have a better transparency in their accounting records as well. So they maintain trading currency or transaction currency. So their transaction currency would be like investment currency, let's say USD, and base currency, let's say here for a feeder A would be INR. And their daily conversion ratio of INR to USD or USD to INR. So on the basis of that, they calculate their all the means they measure their assets and liabilities. I would say feeder A will measure the assets and liabilities on the basis of INR, and that will be converted into USD. So that is what we call a currency conversion even. So on accounting date, we convert that currency means transaction currency into base currency. So this is what we follow the treatment for this master and feeder structure. But again, the important aspect is how you process the accounting entries in your books of master and feeder. Under standalone, it's important. Sorry, it's a simple, right? Under standalone structure, it means one fund, and you don't need to allocate anything to any funds, single fund. So only, let's say single fund, it means it's a GMT fund. So you need to record whatever transaction that you would see, assets, liabilities, you need to record it. That's it. Let's say you have assets of equity 1000 and liability 200. So you can record it. It's not a big deal. It's very simple to record it. But here, if you see same logic, if you see every time you will have to prepare like this under feeder. After the feeder, then master will record the same. So you would see multiple activities. How it looks like, I'll show you that master and feeder. Just give me a moment. There's your master and feeder processing example, or let me just see summary of tax allocation, allocation is of underlying related analysis, suspense securities, book allocation result, account allocation, processing example. Let's say we'll take this one. Yes. So this looks like in your master. Account. So this is a partner's capital. Deferred summary. Earned income, dividends, and corporate bonds interest payment. You have earned it this much, and then that needs to be direct fees, audit fees. Total main categories of two. Master investment activities include normal expenses. See, this means whatever expenses that you would see that needs to be allocated even. The master investment activities including The normal expenses, this portion rated, result in expense incurred by main category as follows to be allocated to feeders as much in the book of allocation. So you need to allocate this expenses as well, audit fees or whatever expenses that you would see. So the master investment activity result in the net withholding incurred in the amount of 70 to be allocated to feeders as such in a books of allocation. The master investment activity result in realized exchange gain and loss applicable only for global master as follows. Realized exchange gains totaling 700 and realized exchange losses totaling 200 to be allocated to feeders as such in tax allocation. The master's investment activity result in a realized capital gain and loss as follows by the term type to be allocated to feeders as such in tax allocation. Whatever expenses income you would see that needs to be allocated to feeders. Why? Because of tax purposes. Here we have example of global fund, account number, date, count, weekdays, everything considering all beginning balance, ending balance, income earned. See this. So expenses 300, net with the whole net with expensed 70. So we have allocated here. And what about the real gain and loss? Where this comes from? If you see all this, they have taken a balances. Current net realized, current net unrealized capital, current net prior unrealized capital, change in the net unrealized capital 5,000, and the current net unrealized exchange gain and loss, whatever that you have, so they have calculated here. And allocation is also important. Allocation, it means see master, if the master is holding investment from the direct investor, then they'll allocate to investor. And if the master is holding investment on behalf of feeder, then that needs to be allocated to feeder. That's the difference. Let me show you. See, this is a feeder account. Let us see. Yeah, feeder account. Feeder is holding the amount, investment details, shares outstanding. So it means here feeder hold units in the master. Master issued units or allocate units to the feeder. It's like a fund of fund. In a fund of fund, what happened? When let's say X fund want to invest in Y, what happened? So Y fund allocate the units, correct? And in a master and feeder happened the same thing. In a master and feeder happened the same thing where the master will allocate the units to the feeder and feeder will hold the units. Here if you see shares outstanding. So it means this is the units number where the masters they're holding. Yeah. See this. Share outstanding. And here this is your feeder account. So they have invested. If you would see the master means feeder. Let's say if there are two feeders and they have equally allocated into two. If you just multiply, then I will get the total outstanding units number for two feeders, and that combined value we would see in master. Hmm. Hmm. Yeah, feeder level. You means most of the people they work at feeder level. They allocate everything to the different accounts, feeder accounts. So how they allocate? Let me just check the number. 24703. 24703. So we'll check about the allocation. See here. So here if you see, now you can relate. do the total. This one is one feeder. Okay. Again, this one is another feeder. And this one is again another. There are three feeders. And their market value of investment is feeder A, feeder B, and feeder C. Their total investment value is, which will tie with the net assets value of master. And where I have checked it, I'll show you that as well. So this number, see this, 24703. 24703. 24703. It's a feeder account. Global fund feeder account. Here. Okay. So here it means there are three different feeders. So you need to allocate all that to the different feeder accounts after the calculation, after the measurement. You need to again see here, if you see this one, expense or director fees incurred 42, 43, 39, around 120. That also it needs to be allocated to the uh, feeders. Here if you see, read this, then you can relate. The master expense by main category were allocated to feeders through the following systematically generated and applied transaction. So system will generate it. Means your Geneva, Investran, whatever accounting platforms you have, that platform will generate the statement like this. Your job is to total fees you would see in master. So this total, it should tie, once you add it, all three, it should tie with this. Right? Same if you see this expense, audit fees, this is all about director fees. Second transaction is about the audit fees. See the allocation, expense allocation. Transaction code would be expense, where the master will charge it and this will be allocated to the feeders as per their contribution, investment contribution. Here, if you see, for every fund, every feeder, you would see different percentage. Why? Maybe their investment percentage is different, their investment contribution is different, and that's what you would see variance in the percentage of expense calculation. Same will apply to the income portion also. It's not something that only will apply to the uh, expenses, but you would see income as well. Here they have allocated. So the master net, see master net incurred was allocated to feeders. So if you, this is the total you would see in master, and master's total will split across all three. Why this is again and again we are discussing with this allocation part? Because in a master and feeder structure, your complex part would be allocation. So every day to allocate the expenses and income across all the feeders, and then to produce NAV for all feeders, and that NAV it should tie with the total NAV. So that becomes complex part, right? So here this expenses net with the holding, so expense incurred. So through the following systematically generated and applied transaction, thereby allowing the feeders to look through to the master when reporting the net with the holding component of net investment income on applicable reports. Expenses applied, and here the important one is the master's net value, means whatever value that you would see in master fund was allocated to the feeders through the following systematically calculated and plugged market value maintenance. Your investor can automatically allocate the value, but your job is, as I said, that you need to calculate that and make sure all balances which are dying. If not, then you should do the investigation. Then your investigation will come into picture. Right? So this is how the allocation or master and feeder accounting works. So one more example will take it.
I guess for sure, the not time that period, it might throw some errors, right?
Then you need to do investigation. So might be in one of the feeder, let's say the expenses allocated incorrectly or recorded incorrectly, and that's what you are saying, the balances which you're not tying.
Okay.
So that would be the probability. It's a matter of, see, they are investing into, means feeders, they are investing into masters, and master investing into different variety of financial instruments. So it's a,
Yeah.
first of all, try to understand their flow, right? If something happened with the balances, so it means maybe with XYZ feeder, the system incorrectly recorded transaction, maybe duplicate or double or incorrect amount or with the incorrect data, and that's what you are not able to uh, tying the feeder and master balances with each other.
Okay.
So you have to see net cash effect of the transaction generated to allocate feeder. So this one, proportionate share of the above changes in the master's net asset value was used to systematically generate and apply a transaction to offset the effect and to adjust the cost basis of a feeder and holding in the master accordingly. So this is the master account number, sorry, feeder account number. Feeder is holding, so this much of cash effects that you would see different with the different transactions, expense, or incoming and outgoing transactions. So net effects is this, and net effects. So it should recorded in feeder only. So had the net effect of the transaction generated to allocate feeders. So sometime what happened? Let's say there are 3 to 4 feeders, but if you see in a only specific in a A feeder, let's say this is the A feeder. In a feeder only, you are saying the multiple transactions. So that needs to be only recorded in feeder A, not with the others. That also happen because sometime you would see specific expenses with the feeder, that particular feeder only. So it means your salary company, they cannot process to me, right? Ultimately. So they'll process salary
Yeah.
to you only. Anyways, let's say you wanted to pay my class fees, and that's what you send notice to the company that if you can transfer payment to the Sugarage account, that would be better. But still, they cannot process payment to me directly. So they'll process payment to you only. And once you have a payment
Okay.
in your bank account, then you can manage your transfers and all. So it means in accounting, so you cannot ask someone to do your accounting entries in someone else's book of account. So same logic you can apply with the masters as well. If you see any master specific transactions, that needs to be recorded in that master only, sorry, feeder only. So that's the logic behind it.
So
So
you mean
yes. So now if you see
in the
here, we have we
report?
have example. Here if you see the master number, okay? So this is a master number. 24701. 24702. This is another
That is
master. Yes, feeder number. Sorry. This one is a separate feeder number. This one is separate feeder number. And if you see their total
yeah.
expenses, which are different. But there, anyways, if it is difference or if you see any change, the total of all it will tie with the master. See this.
Okay.
This total, this this one, and again. So let's just check it. So had the net cash effect of the transaction generated to allocate feeder 2470, feeder 24703, proportionate share of changes in the master net assets value been positive, a series of MSDEC transactions would have been generated instead. So might be they would have given. Just do the calculation if you can. This one. So 4755. Do this calculation with me. 4755 plus 4891 plus 4483 4483 4483 plus 14129, right? Around, yes, yes, it goes around 14130 something. Yeah, if we haven't taken the that fraction of amount, but that exactly it will tie with this. So it means this is your master account. So all feeders we have allocated, and even if you see this, the description which we have given, the net cash effect of all transaction generated to the feeders to allocate gross income, less market discount at a point of sale. So expense incurred and net withholding incurred from a master to feeder is used to generate and apply a transaction to distribute this amount from the master undistributed income as follows. So it means this income is distributed to across all the feeders, and where we have seen that distributions, I'll show you that as well. So we have seen, but still, if you see this one, all three, this allocation, total, this total, and the above one transaction total. So this one. So total of this, it will tie with your master balance. So this is how allocation and accounting works with the master and feeder structure. So one more example if we want. So this is about the capital, if I'm not wrong. It's not a partner's capital. So this is the total investment, cost of investment, and market value. So it means this is something, the cost of investment at the time of investment, the value was this. Cost of investment, the market value of investment. There are three feeders, 1, 2, 3. But the important for us to discuss is hmm,
Since the investors are investing directly in feeders,
hmm.
so all the expenses will be charged on feeder.
Yeah, in that case, then feeder will, yeah, then in that case, say if the investors directly invest into masters, then master will charge direct expenses to the investors, not the feeders. If investors they are investing through feeders, then only expense and all allocation will come into picture. Then otherwise, feeder will allocate to the direct investors, right? Let's say if you wanted to reach out to the GMT classes, then you hired some middleman, and then middleman that sold my course to you or my consultation to you on discount. So it means he will not directly reach out to me, right? He will pay the fees to the middleman. So for example, let's take the example of IRCTC. So when you book the tickets from my make my trip, so you are not paying directly fees to the IRCTC, right? Or let's say for Indian Railway, you are paying amount to the make my trip, and then make my trip team they are processing payment to the main client or their main whatever that the vendor is, and in that way your tickets is getting confirmed. So what you understood from this scenario is, and let's say other way around, when you directly reach to the station and when you opt for a ticket, then you get the direct ticket from the that railway means that their office, right? So once you pay the amount to the
Yes.
directly railway, then also you can means opt that service. So you have
Yes.
two
Right.
scenarios you can understand. One, so if you want to opt the tickets directly from the that railway office means station, then you might see some sort of discount, right? Because there is no middleman, there is no third party. So that's what you might see discount on payment. And if you opt ticket online through Make My Trip or any other platform, so you might see little higher charges. But ultimately, you wanted to opt the railway service and you want to travel. And here also with master and feeder, you would see the same type of, you can relate that. The ultimately investor want to invest, whether it is feeder or master. But if investor directly go ahead with the master, so investor might see little higher expenses. And if investor directly go ahead with the feeder, master, then investor might see low expenses, and that's what it depends. But master will not allow to each and every investor. So there would be limit, let's say up to 10, up to 20 crore, 30 crore, 100 crore to 100 crore investors only would be able to invest in master. So you would see that cap, and that's what feeder will support to the small investors as well with their minimum capital 1 cr 2 cr. So that's the difference you would see. But keep the purpose in mind, that is investor want to invest anyways, whether through master or feeder, that's fine. For investor the investment is important.
Okay. So I have one more question, Shiva.
Yeah.
So if the investor is investing directly to the master,
Hmm.
so will the NAV of master also be raised?
Can you repeat this question?
If the investor is investing directly into the master,
Hmm.
so will the NAV of master also be released outside? Because the feeder we want to know, right, at what price they have to invest, or
So it's not something that, so that depends on, it depends on your feeder. Let's say you're working for a feeder, right? Ultimately, master is allocating the amount or income whatever that you have, right? So master is already allocating each and everything to you. So you take care of your feeder only. You don't need to worry about master. Whenever you purchase something, master is again allocating units to you as well. So if you see here, the master already maintaining the data, let's say units, shares outstanding units, then who is holding this outstanding units? Who is holding this shares outstanding unit? Who is holding this unit? Exactly. So it means whenever you see the change in distributed income or maybe adjusted income, amortization, so this is you all about means factors which we consider to calculate the net assets value, right? So here if you see net value is this 2.0084. So this NAV will be allocated to across all the feeders as per their units number, what units they are holding, right? Ultimately they have calculated the expense, income, everything means at a master level they have calculated NAV, total outstanding units, distributed income, then the income earned, so how much income they have earned, amortization accrued or earned, uh, then again it is kind of a capital gain, loss through exchange of currency, then expenses, net expenses which incurred, net investment income, and undistributed income. So shares outstanding value is this 10 lakh or 10 crore for 4 lakh something, right? And dividend
yeah,
earned per year. So this dividend will be distributed across all the investors. So if you see, they have calculated assets, total assets divided by total number of shareholdings. Do this and calculate NAV and tell me. So you have NAV as well. So they have considered the factors for NAVs, unrealized gain, loss, everything. So these are the factors they have considered. and computed NAV. So if I calculate the NAV, 20887,590 divided by 1040000. So it
Just a moment, all the components which form the DNA.
yeah, you can take it.
What is this distribution adjustment mean?
If you say distribution, it means distributed income if they want to adjust it or take it back. So in that way, they mention it. So it means distributed income means they have distributed to the uh, all feeders. But
Okay.
what if they call it back from the due to the XYZ reason? If you see, so they can highlight under distribution adjustment. So it means you paid 2,500 fees to me, or let's assume it my original fees is 5,000, but you paid only 2,500. So
Okay.
this is something incorrect amount that you have paid, right? Then you will have two
Yes.
options. What you can do, you can pay again another payment through different transactions, that is 2,500, which will tie with the commitment amount 5,000. Otherwise, you can reverse it. So you can ask me to reverse my first transaction. So you can pay it full transaction, which is 5,000 through different transaction. So if you see anything as such, so that you can highlight under distribution adjustment, so that you have adjusted the distribution.
Okay. So ideally, because feeders are investing into master, so master will be distributing income to feeders, right?
Yeah, master will distribute. So it means, see, simply you can take the example. So Ambani, if Ambani want to distribute anything to their kids like Nita or whatever the kids that they have. So only Ambani, Mukesh, or that Anil, whoever, I think Mukesh Ambani will distribute everything to their kids. So kids will not allocate anything to the Mukesh Ambani. Those are funny, but you can just relate. So it means, let's say in your family also, if you have, let's say, the dad or someone who is managing entire business or whatever transaction that you have, only they will allocate to you. So you will not pay to them anything. You can, what you can do at the beginning of the year or whatever accounting year start, at the moment you can transfer, let's say, 1 crore, 2 crore to them. And throughout the year, your parents will manage the money for you. And then throughout the, again, accounting duration, they'll make the payment to you as well, as and when they earned income from the different investments. So here you would see distribution word. Why distribution and dividend and distribution? So it means master pay as a dividend to the feeders. So whenever master earns something, so master pay as a dividend to the all their shareholders, I would say, or feeders. So have you noted down?
Yes.
I'll take you ahead. So this is a feeder account, feeder first. So now here, if you see here, story changed, right? So NAV is front of you, everything is front of you. So this is all about your master. This is the deck, or this is the NAV, net allocation of unrealized gain and loss. So this is the picture of your feeder. Sorry, master. My bad. So here see the word master.
Yeah, correct.
So now if I take you to the feeder first. Now just do the comparison or valuation, line by line valuation, and see what has been changed. Come on, see the NAV, outstanding shares, total dividend earned, expenses, see total assets. You noted down that for a master, see the feeder. If you can try to match it with feeder, just compare it.
So here the notes are comparatively less.
Why? What could be the reason? Come on. Exactly. So it means this is the feeder data, feeder A. So as per their investment percentage, you would see their NAV calculation, and their total assets in master is this, right? So might be you would see other two feeders, feeder to second feeder, see their total assets, right? And feeder third. So this one would be the third feeder. So see the NAV and all. So it means for every master, sorry, every feeder, you would see different NAV percentage. Here 2.755, here 3.25, and here if you see 1.73. So now what we can do, we'll do average.
Where do you see that percentage?
Not percentage, amount per unit. Here, this one, NAV.
Okay. Okay.
So what I'll do, I'll take this 1.3547 plus then 3.2558 plus 2.75 2.7554 divided by 3, 2.45. So here if you see, exactly the same amount would be So difference would be in fractions. So if you just compare the three different feeders value with this, you would see exactly 2.45. So you might see difference in fractions, and that is considerable. So this, see that same for all three. So it means here you can learn one thing. So entire things, whatever the investment, expenses, anything that you will see that needs to be allocated to each of the feeder. And that's what exactly we have done the same thing. We have allocated everything to the different their feeders as per their investment contribution. Okay. Why this is important? Again, the question here would be around why the allocation is important. So read this line, tax allocation. So it means after the allocation, tax will be calculated and paid to the government. And that's the reason. So every feeder will be entitled to calculate taxes and tax liabilities for the funds, and they'll have to pay uh, to their, I would say, I mean, the government bodies and all. So wherever they are from, let's say feeder A is from India, then they need to pay tax to the Indian government. If the feeder B is from US, then they need to pay taxes to the US. If they are from the different, let's say UK or US, any other country, then they need to pay taxes to that particular country. So that's how master and feeder works. In their description only, they write or mention book and tax master. It means the structure is for tax purposes. The structure, apart from tax, the structure also helps. Already we have discussed means why the master and feeder come into picture. So that provide tax benefit, easy for a tax allocation, even investment management, where the master can focus on investment, right, and manage everything. So there are different purposes. So here might be master unrealized gain, realized gain. We'll see if they have allocated any tax. Dividend on per year, total assets, distributed expenses. We'll see. Tax. Mm. Here also, if you see master total percentage, see the percentage. For example, so in feeder A, total investment is 40% and B 60%. See the allocation as well. So this will tie with this amount. So master is holding 100%, feeder A and B 60, 40 and 60%, 4 to 6, 60-40 ratio. Tax. Okay, a book and tax master require two allocation methods, book and tax. To allocate master fund activity for a given valuation period, book allocation can be performed before performing tax allocation. And both allocations can be performed at once as controlled by an optional user entry made at the time of the allocation request. Posting associated with book allocation can thereby optionally be reviewed prior to applying tax posting. Process security related transaction in the master fund using the same process as that which would be used for a typical mutual fund. Process expense and capital share activity in the feeder funds using the same process as that which would be used for a typical mutual funds having multiple classes of shares if applicable. Distributions of income of gain and loss from feeder funds when applicable. would typically be done at the latter step. So it means they have given steps. So we'll see that where they have mentioned about tax allocation here. Initiate the account allocation AAA process to allocate net assets value, net income, and net realized gain and loss from the master fund to the feeder funds. For a given account allocation request, the book allocation is typically performed without immediately being followed by the tax allocation. Once book allocation result have been reviewed and second account allocation request is met to reprocess book allocation and to process tax allocation in single request. So it means they can process tax in single request as well. So ultimately,
Uh, just a question, yeah. That book allocation and tax allocation, right? So book allocation
book
generally
allocation it means whatever expenses income that you would see that needs to be allocated first, and then you can allocate the tax.
yeah, oh, okay. I do
Means you
get
need
it.
to
So
update the
book
book first. See, if you want to calculate the tax, if you want to calculate the tax percentage to the feeders, so you cannot directly apply the tax percentage, right? First of all, you need to allocate their income, expenses, everything. Then only you can apply the tax percentage. Otherwise, how they will pay the taxes and all?
yeah, correct. So I have a question, right? So book allocation should be done before tax allocation,
Yep.
and then tax allocation will be done at the feeder level.
Yes. Means master will apply. Let's say master will apply the percentage 10% so that you can split. See their percentage 10, 5, whatever it is. So accordingly that you can split. Or maybe at a different feeder level you would see different tax percentage as well. So here so we have seen like investment percentage 60/40. So in same manner you would see tax percentage as well. So anyways,
Okay,
total tax will apply to the master, and then that you can allocate.
okay. So yes, no, no. I didn't understand your point clearly. The cut, it will be cut at the feeder level.
It will be cut at feeder level, but who is holding the investment?
Yeah, I do get it, but
Feeder.
investment is
Feeder. So that's what feeder will send the instructions so that you can pay 10%, 5% taxes in that way.
okay. So my question is, so the tax that has been cut at the feeder level, then has to again go to the master, right? So it will be again be accumulated back at the master.
Yep. See, the point here is, so are you aware about GST? Who pay the GST? End customer,
Yes.
right? So let's say if I'm selling something, so it means at the time of purchase, I'll pay the GST, but at the time of sell, so I'll get the credit. So debit credit that will offset, and net credit would be available in my GST account. Correct. The point here is, so the master is dealing with the investment. So master knows it, how much investment master is holding, and even master will carry the documents of all expenses, income tax, everything. So master will send the instructions. Okay, let's say you are one feeder, I'm also one feeder. So master will ask, hey, can you process 10% taxes to the government? Right? Let's say in a 10%. So you are able to pay 5% and I'm so that's what 5% split that will be done at feeder level then. So you will pay 5% tax, I'll pay 5% tax because each and every feeder he would see different percentage of tax.
Okay.
Right? So might be you would see different in ratio as well. Let's say 7% you are paying and 3% I am paying. You are paying 7% to the Indian government, I am paying 3% to the US government. But at a master level, master will consider 10% tax, not the uh, means different percentage. So total of feeders, anyways, total of feeders should be master's total, simple. And total of
Yeah.
masters will be allocated to all the feeders.
So now I have one more question. So the final NAV that will be generated, it will be generated after the tax allocation, right?
Yep. Here, if you see, they have given steps as well. Initiate the accounts process to allocate the net assets value, net income, and net realized gain and loss from the master fund to the feeder funds for a given request. means your allocation will be performed, and again tax also it will be calculated. So distribute income and gain and loss even when if applicable from feeder as would be done for typical mutual funds or hedge funds, you can say. Perform NAV verification at the feeder fund and a class of shares or if applicable level as would be done for typical mutual funds or classes of shares if applicable. Publish NAV of master and feeders as would be done for a typical means funds, that you can say. The important is for a master and feeder fund structure in which one or more feeders are fully invested in a single master without retaining an uninvested cash balance. The investment from feeder to master screen can be used to facilitate the transaction entry process described in a step 3 and 4 above. See investment from feeder to master for further information.
Investing is paying fees or PDF or something.
Yeah, I'll send. I'll send. Wait a minute. I'll send that. So they have given steps here. So you need to follow the steps while calculating booking tax. Where they have allocated tax, we'll see that if they have provided here bid and op spread, issue currency, income currency, USD, security definition. Okay, this is a different page. Income, second, guys. Guarantee. This is, I believe, investment page because here you can see QCP and also it means it's investment. The security description and asset group. Sweep transfer option effects fund, the daily dividend fund, and shares, fund type, account number, equalization, income equalization if it is applied. No, no. And 8 for days. Conversion account. For multi-class accounting uses to set up a class securities data. Okay. Capitals. Realized gain, short term, long term. Dividend on per shares. So sometime we calculate the taxes on the basis of capital gain and the dividend and as well as the means whatever investment return that the fund received, on the basis of that we calculate and paid it to the government. Here redemptions, redeem, exchange,
But is
total.
it necessary that every country, with all the feeders have to pay the tax, or they could be
Depends
small,
on depends
the
on their.
country does not charge tax?
It's not something like that. See, every government want taxes, right? Every government want taxes. Without tax, how the government will facilitate to their people? So it means taxes, of course, would be there, but it's a matter of maybe depends on the percentage, 5%, 2%, 3%, 10%. So Indian government charges 20% taxes. It was 18% earlier, but now they have increased the tax percentage. So that depends on their means governments and all. That is not something which is in our control. We are not
Yeah.
lawmaker, but what we can follow the tax percentage, whatever percentage given, that we can follow. Okay, so share outstanding and all. Here if you see, this is the your subscription and redemption statement. Subscription units, subscription exchange, dividend reinvestment, and total subscription units value, and number of this value. If you just split across number of units, then you would be able to calculate the net assets value per share. Here, see this net asset value. Subscription total, dividend total, that you can split across all the units, then you would be able to get or calculate net assets value. You can write down these components as well required to calculate NAV. Note down it.
Yeah.
Let me know once you're done. So are you done with it?
Just a moment.
Okay. So this is all about feeders allocation. We have already gone through. 1, 2, 3, 1, 2, 3. Blend. Yeah. So we have already covered this one. Okay. So now I will go back and then again sum up what we have discussed. So here, so it means you would see the structure where, so most of the funds, they come up with the master and feeder structure, and this way they manage their entire investment from the different feeder pools, right? Now, if you see any question on this, like what do you know about the master and feeder, or maybe what are the different structures that you have worked on? So you might expect question like this, or how, uh, let's say on master and feeder specific, the question would be like how allocation process works in master and feeder. So we have discussed that. So it means for capital, expense, income, dividends, assets, liabilities, everything that master allocate to the feeders, and then feeder maintain the accounting for their feeders and publish the NAV reports individually for the feeders and publish it. Right. So in that way, they calculate everything. All right. So two structure we have discussed, and now we'll jump on the third structure. Just note it down. Third structure would be your composite structure. Composite. Yeah.
Can we continue?
It's office timing.
Yes.
Oh,
I work
nights.